Hello, very warm welcome. You're watching the weekly edition of Your Trades on ET Now. This is Priyanka Uppal and along with me Snehi Shah. Snehi, we saw record levels on Nifty this week. What an important week we saw. A lot of action from political scenarios, allocation of key portfolios and reinstating of key ministries, 100-day agenda, budget themes, and amid all this, Nifty gained 1%. Mid-cap and small caps outperformed the benchmarks 3.9% precisely. Mid-cap gained, small-cap gained nearly 5% this week. Whole this week, budget-related themes did very well. You talk about fertilizers, chemicals, infra, and to extent defense, sugar, cement. All these sectors were buzzing throughout the week. We saw record levels on SIP also coming in this week only, touching nearly 21,000, and a lot of high frequency data coming in this week. CPI came in lowest in 12 months. A lot of action. On macro front also, we saw a lot of things. FOMC need no rate cut, but yes, dot plot indicated aggressive rate path for next year and not this year. Just one rate cut on the card. But then inflation saw signs of cooling off in US economy, and bond also inched lower because of this reason. And we saw US markets also reacting on it. But the bigger news which came in from many sectors here, of course, cement, infra, they were in focus this week on the back of the infra push and possibility of even cement space coming under the ambit of GST. This was buzzing out throughout the week. Affordable housing stocks were on the move. A lot of action which we saw this whole week, in fact, Snehi.
Absolutely, lots of action we did see coming in this entire week, but like Priyanka mentioned, Nifty has been hitting record highs, and not only for Friday's session, it's been for Wednesday, Thursday and Friday. 3 consecutive sessions of Nifty hitting record highs every day despite being range bound, so that's an anomaly to look out for. Very interesting moves coming in this week for the index. And well, yes, inflation has been looking good, but wholesale prices have accelerated to a 15-month high of 2.61% in May. So while CPI is looking good, WPI still looks like a bit of a pressure point coming for us. Home First Finance and HUDCO, the likes of financiers of affordable housing, were in focus this time because Modi 3.0 has extended the PMAY to 3 crore more houses. So on the weekly move, we had Home First that was up 26%, HUDCO up 14%, PNB Housing up 11%, LIC Awas both up 10% each, Aptis, Aadhar, India Shelter, all of these stocks have done phenomenally well. And even on the real estate developers side of things, you have Suntech, Kolte Patil, all of these stocks have done brilliantly well in the trading session that went by. And well, like Priyanka mentioned, sugar has been gaining on the back of a possible MSP hike. Defense stocks were in focus this week after Rajnath Singh tweeted about the indigenization of defense in India. And well, as cement also on the back. And you had oil and gas stocks also. And you had city gas distribution companies also in focus on the back of having diesel and petrol come under the ambit of GST, which is a possibility, is what HS Puri also told us. But moving on then, we also had MF equity inflows coming in. They've touched a record high, up 83% on a month-on-month basis. So the mutual fund space is also up and buzzing. Lastly, what I want to also highlight is the moves in the primary markets that we've seen. We have 3 IPOs coming up next week, and we also had some news over the course of the week that kept certain stocks abuzz. The likes of some chatter coming in on the Prestige Hospitality business IPO. You had the Hyundai IPO that was in focus on Friday, and the buzz about Haldiram's potential IPO as well, since they were not getting an enough bid for their stake sale that or the complete sale that they wanted to do. But well, yes, those were the big headlines of the week. But with that, let me also welcome on board our guest today, and we have Rajesh Palvia, Head Technical and Derivative Research at Axis Securities on the technical side. And we also have Mayuresh Joshi, Head Equity at Markets Mind India on the fundamental side of things. So gentlemen, thank you so much for joining us on the show. Rajesh, I'm going to come to you first. And like I mentioned earlier, you know, Nifty hitting record highs for 3 straight sessions. Nifty Bank above 50,000. Mid-cap, small-cap have also been hitting record highs. You have sectoral moves, sectors also hitting record highs. Nonetheless, Nifty has been trading slightly range-bound. So what do you have to make of this anomaly that we are seeing in the market, and what's the view going ahead into next week?
Good afternoon, Snehi. Good afternoon, everyone. So Nifty restricted its gain less than 1% week on week, but the way market behaved during the week, it was very strong buying action across the board in the so many sectors. So that clearly giving us confidence. There is a full of confidence on the street, and retailers and participants are aggressively buying in the market. The sectors where we were seeing underperformance in last couple of years, a sector like paper, fertilizer, even sugar and other sectors, now they have started participating in this rally. So looking at the broader market, we are holding our bullish view. The kind of buying action across the sector which we are witnessing, that clearly shows that this rally can extend further, and possible target for Nifty we can see towards 23,000 700 to 800 in the continuation of this up move. So buy on dip should be your strategy based on the derivative data. The major major put writers are placed at 23,300, 23,100 strikes. So these areas are likely to act as a major support area for any kind of minor dip if happens in the market. So your stop loss should be placed at 23,200 to hold long position. On the higher side, 23,000 700 would be the possible target in the near term basis. On the bank Nifty, still bank Nifty is struggling to give decisive breakout above 50,000 mark. So that's the challenging level at this moment based on the call concentration. So I think if bank Nifty starts a new week above 50,000, 50,100 mark, then there would be short covering action, and then possible rally can extend to 50,500 to 50,600 for bank Nifty also. Though most of the banking stocks have shown some buying interest in this week. So I think next week we could see a rally in the banking stocks, and bank Nifty can also start contributing to this upward momentum. At this moment, yes, we are holding bullish view for bank Nifty. Your stop loss should be placed at 49,600 to hold long positions.
Okay, so you would be holding the long positions. I have another question also to you, Rajesh, but I'll come back to you. And we have Mayuresh Joshi also on the show. Mayuresh, welcome. Priyanka this side, first time talking to you on the show here. Mayuresh, but then what do we, the whole week we saw that the budget focused stocks were in action this week. You talk about infra, defense, fertilizer or cement. What should we aim at now? Should we look at these sectors scaling, achieving new heights going further?
Afternoon, Priyanka. No, I was hearing your opening remarks, both on macros and micros, and it's a pleasure to be on your show for the first time. But two things happening here. One, I think the markets are looking forward to what the probable budget announcements would or might be. Our own take at Markets with India is that the reform processes which have continued for 10 years, there would not be any significant change in terms of capital allocation for a whole host of schemes that the Modi government has embarked upon. Infra development and infra allocations is expected to double over the next 5 years. There is going to be significant allocations as far as defense is concerned. You've already heard statements related to rural and urban affordable housing. And therefore, I think roads, railways, highways, ports, infra, manufacturing, I think the capex in terms of budget allocations will continue. The second part in terms of how the markets might actually behave, post the budget, and our expectation again is that there might be no negative surprises that the budget will probably throw up. We will still continue on the path of fiscal consolidation, and therefore that should be taken positively by the markets. The additional 1 lakh crore also gives sufficient amount of elbow room and headroom for the government to probably play around with in terms of both allocations towards infra as well as reducing the fiscal deficit in general. So to that extent, a lot of freebies which are expected by the market, which was the fear, I think should not come through. I think it should be a more prudent allocation as far as the budget is concerned. And therefore, we'll head back to earnings. And earnings are expected to hold up in the 12 to 14% range. Domestic cyclicals is something that will still continue doing well. And a whole host of sectors, you pointed that out. You've seen huge moves continue in sectors like defense, railways. But in our opinion, I think selective stocks within the infra theme, cement theme, water treatment, water allocation, I think that could be a big theme for the budget as well, is something to be looked out for. Consumer staples discretionary both selectively should start doing well with good monsoons expected. Rural recovery in real earnings should start coming through in the second half, which will give a huge leg up for these segments of the market as well. So I think more focused on the domestic areas at this juncture. Our take is that a balanced and a mixed approach in terms of your portfolio, including some stocks from pharma, can absolutely hedge the aggressiveness in the domestic cyclical overweights that you probably got. So remain optimistic on the markets.
Naresh, thanks for that view coming in, but I'm going to request you to hold that thought because we're going to slip into a very short break. Mayuresh and Rajesh will continue with us in the other segment as well, where we'll get a little more theme specific and talk a little bit more about the technicals when we come back from this break. So you stay tuned.
Welcome back. You're watching Your Trades. Mayuresh Joshi on the fundamental side. On technical side, we have Rajesh Palvia. Rajesh, I heard you. You were saying that you would be long from here. And there's one more reason to it. Of course, FIs have significantly come down on the short positions from 3.4 lakh contracts. Now their short position is merely 34,000. What do this indicate? Are we in for more higher levels? FIs can turn bigger buyers because at least their selling has stopped. The quantum of buying is not that significant, but at least the selling has stopped.
So Priyanka, if we look at the last 5-6 month data, FIs were absent in the market, and this really is led by the domestic participant. I think they have cut down their short position. So again, this is again showing that there is a pain on their short position. That's why they are cutting down their short position. And I think if FIs are not doing short position at this moment, so the retailers are participating in this market, and they are quite bullish on the market. So I think domestic flows are driving this market at this moment. And the way we are seeing that incremental growth in SIP flows and other avenues, so I think that is likely to continue further, and we believe that this trajectory can continue further more higher, though FIs are not buying in the market at this moment also. So I think domestic flows can drive the rally, as most of the domestic themes are playing out in this market. So that clearly shows that everybody is optimistic towards the growth trajectory of Indian economy, and that's why this is the sign of the continuity of this bull market.
Thanks for that view coming in. Mayuresh, I'm going to come to you, and I want to get a little sector specific here. Let's talk about 3 sectors in focus. First, on the gaining side, you have the real estate space, right? Do you still see more legs to this rally given that the PMAY has been extended? And on the flip side, you've seen FMCG and IT being the top laggards today, and I can't help but notice that the top Nifty 50 losers, 4 out of 5 are from your FMCG and IT, likes of HUL, Infosys, Tata Consumer and ITC. What's your outlook for this space going ahead, as well as do you see more legs to the rally when it comes to real estate?
So I think it's a natural trend. If the market is in momentum, I think a lot of these defensive spaces go into a relaxed mode, right? So to that extent, I think how the monsoons play out and what the initial signs are being seen of a very normal monsoon this time around, above average in some areas as well. I think you might expect a decent rebound as far as rural incomes are concerned. Rural is still a large part of FMCG sales, and therefore as rural incomes will start coming back, and there is a definite trend of discretionary spending coming back to the forefront, you will see volumes pick up quite significantly. So I think a lot of ad spends that is happening, a lot of grammage increases that is happening without any price increases might just normalize, leading to better numbers from the second half for a lot of these FMCG players. For reality as a space, I think we're still going through that 6-year cycle in the third and the fourth year, 2 years still to go. Historically, as we've seen real estate cycles play out, pre-sales velocity for most players, you've seen launches by DLF getting sold off in a week. A few launches by Soba, as an example, have got sold out. There was a launch by Kolte Patil in Pune, which got sold out in a matter of weeks. And therefore, I think the appetite in terms of premium and and above par properties, which is above notional values, which an average investor probably pays, is still looking very, very good. And to that extent, I think real estate developers have done well. But real estate ancillaries is something that one should now start focusing upon. Greenlam Laminate, Century Ply is an example, right? They're just about right at this juncture. They've gone through a lot of input cost inflation pain in the past few quarters. Volumes will come back because as new houses are now getting built, you'll obviously need refurbishment happening in those new houses. and existing houses will continue their mode of refurbishment as well. So I think real estate proxies, ancillary stocks might do well. For IT sector as a whole, my whole take is that wait out for Q1 numbers. Mid cap IT relatively better fared compared to large cap. Order flows have remained consistent, margins have remained consistent, commentaries related to both revenue growth as well as pricing have remained consistent as well. The valuation and late stage basis is something one needs to comprehend with. But for large cap IT in general, I think what probably happens with three of their biggest spaces, BFSI is still going through some element of pain in North America. Retail and manufacturing, both in the Euro context and the American context, should start showing signs of recovery in the second half. There might be some element in terms of frothiness as far as pricing and orders are concerned. So wait out for numbers for Q1 for large cap IT, and anybody holding mid cap IT can continue.
Hear you, Mayuresh, mid-cap IT, and you also mentioned about real estate, building material, and the real estate proxies. Okay, Rajesh, coming to you, one last question. What would be your recommendations for the coming week?
So first stock is from the pharma space. Cipla is the on our radar. Stock is now at all-time high trajectory. The way stock managed to give breakout of last 3-week consolidation, that clearly shows that there is a continuity of the uptrend. We believe that Cipla can continue furthermore upside towards 1620. One can buy this stock with stop loss of 1530. The second stock is JSW Energy. Stock managed to give breakout of its multiple supply zone on the daily chart. Stock is almost enjoying its all-time high trajectory. So JSW is looking bullish. Technical structure on weekly as well as on the daily is showing that this momentum can extend further. Upside target we are projecting towards 710. Keep your stop loss at around 668. And the third stock, which is Triveni Engineering. Most of the sugar stocks have done well, and Triveni Engineering again, looking very promising. The way stock managed to give breakout of almost 7-8 week consolidation, that clearly shows that here we can see a follow-up buying action in coming week. Possible target we can see towards 425. Triveni Engineering is buy with stop loss of 388.
All right, Rajesh, thanks for that view coming in on the technicals. And gentlemen, thank you both so much for joining us today and taking the time out. But on that note, Mayuresh and Rajesh, we'll let you go. Thanks so much for joining us. Let's shift focus now from everything that's been happening in the markets to the primary markets now. Lots of buzz happening in the IPO front. Next week, we have 3 IPOs lined up for us coming as well. You have DEE Piping Systems opening on the 19th, Asan Loans opening on the 19th as well, and Stanley Lifestyle opening on the 21st. But Priyanka, I believe Hyundai is the one that we're watching out for, some source-based news coming there.
Absolutely. In fact, Anurag Joshi gets us all the news, and this is one such IPO which we looked about because this is a clear case for re-rating for the entire sector also. Anurag, get us what you have.
Hyundai Motor India is likely to file its draft red herring prospectus with the Securities and Exchange Board of India as early as today. Now, this is one of the most coveted IPOs for 2024, and it is coming at a time when there is a surge in the pace of IPOs in the country. And we've had 2 recent IPOs, including Ixigo and also Office. Hyundai Motor India IPO, the size is estimated at around at least $2.5 billion. So if this IPO is successful, it will be in the league of what LIC had done in 2021. It's one of the biggest IPOs, and Hyundai itself is one of the oldest foreign automakers in India. Hyundai started business in India in 1996, and at a time when Maruti was probably the only automaker during the 90s, it came in and it launched brands such as Santro and Alto. So this is an IPO the market will be watching out for.
Anurag, thank you so much for getting these details for us. In fact, speaking on Hyundai IPO, we did gather some comments from industry experts also and some market experts. Abhishek Basu Malik, who's the chief equity advisor for Sense Capital, he tracks the auto sector and is witnessing great improvement for the whole sector. What all other factors could be at play behind the IPO and the other details? Watch in what he has to say.
There are two parts to Hyundai listing. One part is obviously, the auto sector doing well, and that part, which is obvious. I mean, definitely auto sector is doing well. We are moving from ICE-based, vehicles to EVs, to hybrids and things like that. So that transformation is happening. But the other interesting play here is that the premium that Indian companies are getting vis-a-vis foreign parents might actually see that a lot of interest from actual MNC companies to list their subsidiaries in India, right? So Hyundai is probably an harbinger of that, but you could actually see more such MNC players coming in and listing their companies in India because of the premium that Indian stocks tend to get.
All right, viewers, with that, it's a wrap on this special edition of Your Trades. We're heading into a long weekend, Priyanka. I'm really excited. So, truncated week next week, but still lots to watch out for. But we'll let you go on that note. Thanks to our guests also, and thanks, viewers, for tuning in. We'll see you on Tuesday. Enjoy the long weekend.
And that's a special day for complete 18 Hour team.
Absolutely. It's our 15th anniversary, so don't miss that celebration with us as well.
If you like this video, then like, share and subscribe to ET Now.